Hello, this is Corner Invest. Today I'll be covering a few things. I'll be covering why the stock market is selling off, some possible scenarios that could play out in the market today, as well as some other news that hit yesterday as well. So over here, the stock market is down around 5.6%. At one point, we were nearly at circuit breaker level as well. We nearly breached that circuit breaker level at around $509, and we have erased more than half of the reversal that we had yesterday. So why exactly is the stock market selling off? Is because of this. So the 10-year yield has been rising ever since Trump Liberation Day, and that is opposite of what Trump wanted. So Trump, he wanted rate cuts, but his tariffs have led to some sort of surge in your 10-year treasury, which is normally bad for risk assets like stocks. And then you have your 10 minus 2-year yield spread over here, which is increasing by around 23% just in one day. That's just crazy. So normally you want the range to be around 0.2 to 0.3. When it goes back up to around 0.5, 0.6, 0.7, that is where it gets dangerous, because at that point you will see some form of a credit event where your banks start to collapse, when all your different hedge funds, they start to get basically liquidated and all that. And that is normally the range where you don't want to get into, because that range will lead to a recession. So why exactly is the 10-year yield increasing? Is because China is selling a lot of different US bonds right now. So China is doing this because they want to protect their own exports by devaluing the yuan, and they're also doing this as some sort of like a counter tariff measure against the US and to rely less on the US as well. So China, they used to have a lot of your US debt. At one point at 1.3 trillion just a decade ago, and currently now it's around 759 billion. So for China over here, what they're doing is they are dumping all the US treasuries so that they can devalue their currency. And as they devalue their currency, the export prices on all these different countries will start to drop as well, which will make their exports more favorable in midst of all these different tariffs over here. So this is causing a ripple effect in the stock market, because when your bond yields start to rise, what happens is your discount rate for all the different companies start to rise, and your cost of borrowing also increase as well, which is extremely dangerous if it starts to skyrocket, especially when the Fed is trying to cut rates. So I'll be laying out to you all the different scenarios that could happen in the stock market today. So we have two narratives that are playing out in the market today. So the market wants two things. It wants rate cuts and deals, but currently the opposite is happening in those two scenarios over here. So you have yields that are skyrocketing ever since Trump Liberation Day. You have deals with Xi Jinping, which is taking a lot longer than expected as well. Because China, Xi Jinping, is a man with ego as well. He wants to take over the world one day. He wants China to become the world leader one day. And that is why you're seeing China showing no weakness at all, and China hitting back at every single tariff that the US government is basically imposing as well. So over here, I have three scenarios. So scenario one is the best case scenario. It's around a 20% chance. So the 20% chance is that Xi Jinping and Trump, they basically make a deal within the next week or so. So bond yields, they start to rise to the point where Trump is getting worried. He said yesterday as well, he pivoted because he was looking at the bond market, because the bond market was skyrocketing and going up and up and up, and that made him pivot as well. So we could see a scenario where the bond yield continually goes up for the rest of the week, and then Trump and Xi Jinping, they come to the table and they start negotiating for a deal. And if that scenario plays out, then we will go to all-time highs. The worst case scenario is that Xi Jinping and Trump, they escalate the tariffs. Trump increased the tariff limit. So currently now it's around 145%. If he increases it to 200%, 300%, and so on, that could cause some sort of a ripple effect and a retaliation from China as well, in the form of all your different export restrictions. So they could restrict all your different EVs, your rare earths and all that, which are concentrated in the Chinese government as well. And these rare earths are extremely important for the semiconductor industry. I see the base case scenario as this. So Trump and Xi Jinping, they basically prolong this trading war for the next month. They hit back and forth, and then they eventually come to the table and make a deal within a month or so, because Trump has his midterm elections coming up as well. So the midterm elections is around June or July, that period as well. So he has to make sure that he does all this before the midterm elections, because that will affect his midterm elections. And like what we saw back in 2018, although the US eventually won the trading war, they eventually came to the table and then they just negotiated some sort of a deal as well. So I do believe that this is some sort of the base case. So the base case is around 60% chance of Trump and Xi coming to the table and making a deal. But over this next 1 month or so, we will see a lot of uncertainty ahead, and we will see the stock market trading up and down like this 5% days every other day or so. And that is extremely volatile, but a volatile market will lead to a lot more opportunities for yourself. So even though I'm saying this, I am not bearish on the market at all. I am looking to buy to buy on this as this market continually sells off. So if you're to just look at what Warren Buffett bought in the Q1 of 2018. So in Q1 of 2018, we faced a similar situation as well. There were a lot of tariff talks, and this is what Buffett did. Buffett bought 7% of Apple in Q1 of 2018 when Trump was about to impose tariffs on China. So over the long run, all these different macro events, they don't really matter, because as time comes, as time passes by, all these macro events, they will fade. What drives stock price, what drives the fundamentals of the business is two things: your earnings as well as your interest rates. And that is normally what is the most important for all these different stocks in the long run. So if you have a time horizon that is extremely long, then it shouldn't be bothering you that we're selling off like 5-6% every single day, and we start maybe crashing another 10-20% or so. Because in the long run, the two things that matter the most is earnings as well as interest rate. And that is what we saw with Buffett over here. In 2018, he bought quite heavily into stocks as compared to 2024 when he was a net seller of stocks. So in 2018, he bought Apple over here around 7%, and then he bought Bank of America as well, around 3% of his entire portfolio, and in Q3 of 2018, when we see at the trade war that was ongoing as well. So if Warren Buffett is doing this as well, I think it shouldn't be an excuse for you to try and time the bottom as well. The bottom is hard to time. We could well go another 10-20% down from here, but I'm sure Warren Buffett is buying as well, especially with his extremely high cash power over there. Last portion over here that I'll be talking about is Amazon shareholder letter. So Andy Jassy, he just released his letter to his shareholders, and he talked about a few main points over here. So he talked about AI and why investing on AI is extremely important today. So he's saying that he's spending a lot on AI because he wants return on invested capital maybe 10-20 years from now, and free cash flow increase over time. So this is what I like about Andy Jassy. He's a lot more pragmatic. He's more shareholder friendly as compared to Jeff Bezos. Jeff Bezos was extremely focused on just one thing, which is growth and market share. Whereas for Andy Jassy over here, he is more shareholder friendly. He wants long-term free cash flow and ROIC growth, and he believes that AI will help Amazon achieve this goal. This is overall bullish for the stock market. You don't want a company to start reducing capex because of all your different tariff fears. And you at Google as well. Google today, Sundar Pichai, he basically maintained his 75 billion capex spend on your AI data centers and all that. So overall, although no one is talking about this AI story anymore, this is still bullish for all these different companies, because if they can still spend so much on AI even during this tariff war, then it clearly shows that AI has some sort of return on investment on all these different capex spend over here. And so Andy Jassy also said that currently AI chips are extremely pricey. He expects your AI chips to come down in price in the future. So over here, he believes that your inference chips will become more efficient in the future, and reducing the cost per unit will unleash AI using an expensively as customer desires. So yeah, what he's saying over here is that the AI chips now are extremely expensive. And yeah, this might be bad for shareholders that hold Nvidia, and that is why I don't hold Nvidia today, because Nvidia is a company that is basically, I don't think it has a very substantial moat, because you have all your different other companies that are creating AI chips as well. And Nvidia currently has around a 60%, 70% margin, and I do expect the margins to come down over time as the cost of AI start to drop. At that point, they will start to compete on cost, which is what you don't want to see for all your different companies. And yeah, I think Amazon today, it is currently trading around 32 times earnings. And I think for a company that is trading at 32 times earnings, growing at 90%, and yeah, basically improving efficiency, having a CEO that is so shareholder oriented, I think it is a company that is trading at a discount today. I think Amazon's fair value should be at around $200, so it's currently around 10% undervalued, which is why I still continue buying in this company, and I do want it to go down all the way until $150, where I'll get my full position in the stock over here. So overall, I'm extremely bullish on Amazon, although it's down 5% today. It was up around 11% yesterday, but yeah, all these swings don't matter in the long run if you're a long-term shareholder looking to own all these companies for 5-10 years from now. And I do see Amazon as a company that has incredible operating leverage, and once they gain enough market share, they can start increasing their prices, and that is where the real shareholder returns come in. Last portion for today, I'll be sharing with you all the different entries that I have for my different stocks, and yeah, basically the stocks that I'm looking at right now. So the first company over here is MSCI. MSCI is a quality business, and I'm looking to add this one at around $460. That'll be my next probable entry, maybe around $480 as well. And then I'll add it all the way down to around $440. That is where I'll make MSCI my full position. That's why there's this bell over here. Next company that I'm looking to buy as well is Moody's. So Moody's is a quality business. I'm looking to add this one when it gets to around $380, $360. That will be the range where I can get around 13 to 15% CAGR for this company, assuming around a 27 times price to free cash flow multiple. And this company is a quality business that I can see basically surviving the next 10, 20 years or so, unless the rule book changes. Next company is Mastercard. So Mastercard is a quality business as well. It is one that is extremely high quality. It is a duopoly with Visa, and it has pricing power in all possible ways that you can find. So Mastercard over here, I'm looking to add this one as well. I want to add it around $460, followed by around $420. That will be where I'll be making Mastercard a very substantial position in my portfolio. This is one I'm looking at as well. So next one is Visa as well. Visa is a quality business, but the problem with Visa is it never trades at a very good multiple, and that's why I've held off in adding this one. I only added a bit a few days ago when it was at $300. I'm hoping for it to go all the way down to around $270. That is where I'll make. That is where I'll possibly double my Visa position that I have today. Next company is S&P Global. I'm looking to add S&P Global as well. S&P Global is an incredibly high quality business, and you can never go wrong with this company. It's just a boring, high quality business that just keeps compounding every single year. And for me, I'm looking to add S&P Global. My next entry will be at around $415, followed by $383. That is where I'll be adding S&P Global. Next company that I'm looking at as well is Microsoft. So Microsoft over here, it is a quality business as well. I added this at around $340. Yeah, and I'm looking to add this one all the way down to around $300. That is where I'll make Microsoft at a very substantial position in my portfolio. This company over here survived every possible recession, every possible problem that you had over the past 20 years, and I expect them to continue compounding over the next few years or so. It's a legacy business. Will never go wrong with Microsoft, and that's why I'm looking to add it as it comes down in price. And it deserves a premium as well. Hopefully you guys have found this one useful, and please invest safe.